There's a lot of value that can be attained if we understand why there are so many losing traders. And without question, the number of losing traders really overwhelms that of those who are really succeeding. In 2010, University of California, Berkeley released a report that was titled, "Do Day Traders Rationally Learn About Their Ability?" And the report was centered around the idea to test the proposition that individual investors rationally speculate as day traders in order to learn whether they possess this superior trading ability. Obviously, by doing this type of research, they end up finding the chance of success for most people who take up trading, and they can answer the question, do day traders make money? And here's some of the information that was discovered. The majority of day traders quit relatively quickly. 80% of all day traders quit within 2 years. Investors irrationally attribute success disproportionately to their ability rather than luck. And many day traders are remarkably persistent in their day trading activity despite having a history of losses. Now, with those 3 points, we can see that most who take up trading quit. They think they're skilled instead of lucky, yet they have a history of losing. You can also take the word of many trading brokers who report that losing traders make up the bulk of their clients. Statistics report about 95%. And I think we can say with a high degree of accuracy that most traders lose money over time. And when we survey people that are new to Netpicks, typically the number of people losing ranges from 88 to 92% at the time when they first come to us. And this is actually a positive to have a high number of losing traders. That might make little sense considering that Netpicks is in the business of training successful traders. But for those who are successful, there has to be others that struggle. It's just the reality. And certainly not saying that we never lose, but successful traders have the 3 legs of trading: the method, the risk management, the psychology understood. So a string of losing trades is just a part of doing business. Not everyone can get it right. And if it were so easy, as the cliche goes, everyone would be doing it. And they clearly are not. Let's understand a few of the mistakes that losing traders make and how we should all commit to avoid these. Let the 88 to 92% lose. We want to be on the successful side. And you're probably familiar with some of these if you've listened to Netpicks videos and read the blogs over the years. Most of it is worth repeating because honestly, most still have a hard time following these mantras. Now, with our own survey with new members and with information about trading success freely available, we came up with these 5 actions that most failed traders don't bother with. There may be some that you are already doing, but like a recipe for a cake, leaving out one ingredient can really change the entire quality of the finished product. So look for a 65% winning percentage. We call it 2/3, 1/3, and this means that the odds will always be in your favor to win on a trade, but you're accepting the fact that if you go for too high of an accuracy level, 80 to 90, your risk levels will be unacceptably high. And we've seen plenty of people trade with 90% plus win ratios, only to wipe out weeks or months of gains with outsized risk. This 2/3, 1/3 has ruled the day for us for many years at Netpicks. Sure, it sounds great if you could have success 80% of the time or more, but that's not going to last. This is a goal and an objective that can really stand the test of time. Accept reasonable average win to average loss ratios. And I know constantly you read about how you should risk $1 to gain 3, and it sounds really great on paper, but in reality, I don't really know many traders who really succeed with that. It just sounds good to say, but it tends to be unachievable for most. A closer reality is a reward to risk ratio from as low as 1 to 1, which is pretty acceptable, up to 1.5 to 1, which means a $1.50 target for $1 risk. And that's pretty much the top end of the scale. And with rule number 1, the 65% win rate, a simple $1 risk and a $1 reward can work out pretty good. And too often people think that they can get the 2 to 1, 3 to 1 or better, but then their winning percentages fall too low, well below that 65%. It's simply asking too much of markets that are volatile, and the markets are going to do their best to shake you out. Embrace the power of quitting. Now, if you've been around Netpicks for any length of time, you know what that means. It means you have to find a way to stop overtrading. You should only trade during the prime time of the markets that you're tracking and always have your quitting point. And for us, when we day trade, it tends to be 2 winning trades plus positive results equals quitting time. Now, if we get 2 winners but are still negative, we may continue until we reach a hard stopping point, which is always time-based. For example, most U.S. futures markets tend to be valid to trade the first 2 to 3 hours. Then they fall into a bit of a rut and really not worth the effort. Crude oil futures works well from 8:50 a.m. Eastern to 10:30 Eastern. And if we're not positive, that's our stopping point. This is going to make your life so much easier. Plus, it's really going to smooth out your equity curve considerably. And this applies to all day trading, in particular, Forex, futures, stocks. As swing traders, you need to limit your trades as well. You must accept regular losing trades. This ruins more traders than anything else. People hate to be wrong. And you're going to be wrong a lot, no matter how good your strategy is. If a single trade is that important to you and you find yourself sweating and cursing and pacing, then you're simply way over leveraged, or you need to do a lot of soul searching before you continue trading. You need to look at successful trading as how you did over 50 trades, 100 trades or more. One trade or two really means nothing, win or lose. Remember that all markets, they get streaky, good and bad. And really, you have to be able to outstand the whims of markets that you can't control. Can you trade your system correctly 25 times in a row? And I can almost guarantee you that virtually no one has traded whatever system we're trading in demo mode, but live in the markets, of course, 25 times in a row, following the rules perfectly. And if you're anything like me and people I know, who has time for that, right? But really, it's another recipe for disaster. You got to demo trade without putting real funds on the line and do it 25 trades in a row without error. Now, it's no problem to have losing trades. The point of this exercise is that I can guarantee you that you've not mastered your trading rules by watching a video or reading a book until you start to train your mind and develop habits and instincts. You're going to lose money. And if you can get through 25 trades following the strategy as documented, maybe you're ready for real money. But most are never going to do this. So ask yourself, do you want to be in the 8 to 12% who succeed, or do you want to be the masses who don't? Now, these 5 things, they can go a long way in helping you avoid being in the same group as most other traders. Knowing why traders lose money allows you to improve on the very things that they fail at. And the fact is that there are many successful day trader stories, and many of them can be found in the various trading books that have been published. You know success is possible because other people have done it. But the answer is, it's not going to prevent you from losing. Knowing how traders make money and actually doing it are 2 different things. Sure, your strategy matters. At Netpicks, we feel we provide you with exceptional training and strategies. However, we can give you these tools, but you need to execute them. And it's really important to acknowledge and even confront what stands in the way of your success. Trading is not a simple exercise, although simple things like cutting your losses and letting winners run seems really easy to do. And they are not at the same time. With work and determination, though, I think you stand to possess a skill that can be used for life from anywhere in the world and completely within your control. And really, it's hard to put a price on that. Now, since many traders like to use indicators, usually the wrong way, for their trading method, Netpicks has put together a free and vital indicator blueprint to put you on the right track when using an indicator for your trading decision. And you can get access to the PDF and the videos by clicking here.